I want to talk about what you flagged off, and especially since you were one of the first who actually started identifying diseases. And probably driven largely by the trend you started seeing of young people getting lifestyle diseases. Things like cancer, diabetes were not things you really looked at people in their 20s or 30s coming with. These were perceived as more old age diseases. What's your experience been with these kind of lifestyle diseases, and are you really seeing a trend where young people are getting conscious towards insurance, maybe first through health, and then maybe look at the other parts of it?
So yes, I mean, for us, when we launched the cancer care product, it was a runaway success. We were actually quite surprised as to how well it was received in the marketplace. And I think the success is very clearly demonstrated when you look at the number of cancer care products which are now there in the market. So obviously, not only we saw runaway success, but a lot of people thought that they'd want to capitalize on that trend. And now we have seen products around cardiac, now we have seen products around diabetes. I think some health companies have a product around dengue. And so, they have short-term products also where you can buy a dengue cover or you can, some cover of that nature. That is one very clear trend that yes, people see a clear need for buying cover for themselves for some of the lifestyle diseases where the expenses can be astronomical, especially when you talk about some of the new cures which are coming. Some of these cures talk about a one-time spend of $500,000 to $1 million. And you don't want to leave any expense when you're talking about a lifestyle disease of this nature. So yes, I think people see the need. But I also see a second trend. The second trend which I see is that when they paid the premium for once or twice, I think this notion of invincibility starts coming in. No, this is not going to happen to me. Maybe it will happen to someone else. So I do see people drop off. Okay. Which is not a good trend. I think ultimately people have to see that you have to continue to pay for this, because when it comes and hits
so how does this work? I mean, when you say a cancer or a cardiac product, how does it work?
So it differs between a non-life and health kind of product and what life insurance companies offer, because the regulator has decided that we can offer only a product of a certain kind. For life insurance industry, it's very, very simple. If you have cancer, you as anyone who has cancer, then based on the kind of cancer you have, especially in our cancer care product, if it's a type 1 kind, we pay 25% of the money. We are not asking you what you do with it. We are saying we are giving you money to fight cancer. You fight it in your own way. If you have type 4 category kind of cancer, then we give 100% of the money. So we had sold it as a product where we allow you or enable you to fight cancer. The indemnity kind of products actually reimburse you for the expenses you incur.
And in fact, that's where the problem was, isn't it, Amitabh? Because people felt, and I'm not talking now, but I'm talking about many years ago, people felt that it's such a pain, to go there and then, you first foot the hospital bill, then go take the claim, then go pay. What you're really saying is what you've done is you buy yourself a product. If you get diagnosed, the money is paid to you.
Absolutely.
Now it's your problem how you want to spend it. You want to go to the US and get yourself the best treatment.
Absolutely up to you. And we are not asking you that question. So it is a fixed payout kind of product. And that's how the life insurance industry has done it. So that's why you see the same thing in cardiac care. Now people are covering critical illnesses. And you will see more and more of this come, because obviously it is quite obvious that India, cardiac is a big issue, diabetes is a big issue. So I'm sure the innovation will continue to come in some of these areas. Now in cancer, it was simpler because, we didn't even ask for a medical, because almost you will not know today based on medical tests whether you will get cancer tomorrow. In case of cardiac and in case of diabetes kind of diseases, based on a medical condition, you can, predict more, I would say, logically that yes, there is chances of you, having a cardiac problem or a diabetes problem in the future could be more. So yes, there you have to go through medicals and your rate could be determined by what your current medical status or condition is. But still, I would expect more and more innovation to come. I mean, jokes apart, but the biggest or one of the largest selling products of this kind in Korea is nip and tuck kind of surgeries. The product itself is really the best there is when you go for whatever enhancement. If the surgery goes wrong, this product pays for your next surgery.
Wow.
And that's a large selling product because people, I guess, see the need for that kind of product.
Are you going to launch that?
No, nothing of that. But I'm just saying,
what's stopping you?
This fact is known to everyone. It's not that only we have got this fact. I don't know this fact. At some stage, I'm sure it will come in the market. In India, it is not seen as something which is done quite openly. So maybe when the millennials, talk about it quite openly.
So what's your next innovation? Give us a little peek.
Since you talked about innovation, I just remembered. Since we have got the approval and we are launching the product, let me talk about it. So, Annuity is a big market in India, and LIC has dominated the market forever. You'll be also very clearly seeing that the corpus of NPS is growing quite rapidly. So this year we expect, based on the numbers which we hear from PFRDA, that about 120,000 crores will get added to the NPS corpus and will reach about 250,000 crores. Now, obviously, people, as they buy NPS, more and more people will retire, and part of the money has to be used in buying annuities. So we believe that annuity is something we should be looking at. So we have come out with I will give you the simple proposition of the product. It's called deferred annuity, where we are saying that if you are 50, 55 years of age and you have some money today, why don't you lock in your interest rate today? So for example, if you're willing to defer your annuity by 5 to 10 years, you could get an uplift in the interest rates that you could get in an annuity anywhere from 3 to 5%.
Okay.
So you are locking in a rate today for anywhere between 9.5% to 12%, which starts post the deferral of the annuity, and it will be paid to you till the person dies, and then the premiums will be returned. And we have also have an option where it will be paid till your wife dies, and then the premium will be returned to whoever you nominated the family. So
that's interesting, because 50-55 is typically around the time when someone has been able to build a certain amount of wealth and then is hunting around trying to figure out, how do I get a monthly component coming to me?
Absolutely. And he doesn't want to buy annuity today because maybe the rates he doesn't like. He says, oh, they are 7%. I don't like these rates, or actually 6.5%. But here is an opportunity for me to lock in rates at a much higher rate. Yes, you have to defer it. You're not going to get some money for some period of time, but you don't know what the rates would be, somewhere down the line. So we believe that, innovation like this is possible. We have worked with IRDA to convince them that there is a need for this product. I mean, it's not that we have innovated on the product. There are products like this available in the global market. But this is, I think, what HDFC Life has done consistently. We did with the online space, we did with cancer,